as we all know, Vijay is a Twitter celebrity. We are going to blow up this podcast on Twitter after this for sure.
Yeah.
You also had a very popular LinkedIn post which I came across, which was about how people who are building offline or F&B businesses to look at more family houses rather than traditional VCs. So where did that insight come from?
I think what has happened in the last 10 years is that
if you are someone who likes wit and then goes in and tries a taster of stout, and if you are not an evolved consumer, you will turn around saying, oh, that place serves bad beer. Same thing in coffee, right? Is there any tip for any consumer if they were to figure out what is the best flavor that suits them?
people have started to understand what a decent coffee or good coffee is, or even if they don't, curiosity has now built in to try different versions of coffee. Now what it has come down to is that we need someone who can kind of bring in the aspirational coffee to Indians at scale.
I want to just come back to that, raising from your own customers.
2022 when we were raising, I did not have any network per se. There is no other option. I will just tweet it out and let's see. And then I was bombarded with messages from unknown people. Saanand, since you've been doing this for so many years, I have a question. When you said you hire a marketing head, at what stage at a seniority level that comes in, that what sort of person we should hire?
I just feel all founders, personally, me included, we slow down marketing because we try to control it in our vision. And as a function of which we don't get it out, it'll never be perfect. There are other humans in the process creating it for you. So it'll never be what you want. And I feel in that battle, a lot of founders get stuck. Vijay, Rahul, thanks a lot for making time and coming to do this. I know we've had some scheduling trouble, but I'm glad we're able to do this. Of a lot of people who probably consume the podcast know and have heard about Bonhomie because I keep bringing it up at every opportunity I can and bragging about how great the cold brews are.
Thank you.
But I think from the time I've been talking about the brand to now, a lot of things have changed. We'll dive into that, but quickly, I want to know what is your origin story, specifically with regards to Bonhomie and your love for coffee. Where does all that start?
So, love for coffee started when I started drinking coffee when I was 12. My uncles introduced me to coffee.
12?
Yes. I started drinking black coffee specifically. And they told me that you should try black coffee and it's very different, etc. And since then I got obsessed about how black coffee tastes. So then started pushing parents to buy equipments. Like Diwali gifts were supposed to be Philips machines, Hamilton Beach. And I started experimenting a lot at home. And then once I started earning and then started developing going very deep into understanding different brew method, roast methods, etc. And then the specialty way when started in India, I started trying out different coffees from different roasters. So across India, and then started reviewing on my own what I feel about it. Started liking a particular roast in general, which is light roast, and started also trying different beans from across the globe. So got deeper into brewing specifically to understand how every element of water, temperature could impact the final cup, and that's when decided that someday I want to do something in coffee. I was not sure about cold brews at all. In fact, I used to consume very less cold brew as a personal beverage. But it happened, and then I always wanted to get my hands dirty on understanding large scale production for coffee. Like, how does it really work at the back end? And how can I use my homebrewing knowledge to this? And that's where the love came from, and that's the origin story.
Right. I have a lot of questions on that, but I'll come to that after we hear from Rahul.
Sure. Yeah, I think my coffee story is very cliche. Coffee for me started off as a office drink. when I started working, started consuming a lot of coffee. Didn't have a lot of preference. Didn't actually even know what a good coffee tastes like because we had those not so good vending machines in most offices. But then I think when I traveled a little and started going to certain coffee shops, I realized that this product can be something else if had in the right way. My coffee journey in a major way started because of Vardhaman only, because once he kind of created those products back in 2022, sent in a few samples, was like pretty floored by it. Wasn't a big fan of black coffee then. That was my first liking of a black coffee, if I can put it that way. But yeah, it's been a journey since then in terms of trying different things. But I still kind of don't like being very technical about my coffee, even in spite of being in the coffee space. I consider myself as like a not so technical coffee drinker like him, but I enjoy my coffees. Yeah.
Right. Both of you actually spent a lot of time in these large internet-first consumer brands, right? Now they're predominantly internet-first, whereas this business is very offline as offline could get, right? How has that transition been?
So basically, he started Bonomi as a cold brews company a few years back. But I think what we realized is that a very interesting direction would be to kind of democratize coffee, not in the form of, say, particularly a black coffee, but in the way Indians like coffee at scale, right? With their milk flavors and sugars, right? To kind of be more specific to your question, I came into the firm because I had a little exposure on how retail side of things, growth side of things, projects, growth, expansion works. So when Bonhomie was getting into this new direction, this specifically comes from one of my last stints at a gym fitness company I was at. So yeah, it's kind of been a little natural trajectory of change for me. But I think the world has changed for Vardhaman.
Right.
Yeah.
And Vijay?
Yeah, I mean, there's no correlation at all to what I was doing before to what I'm doing right now. I had to unlearn also a lot of things. One thing that, I realized and this whole idea about unlimited capital to grow your startup is not true in real life when you're running your own. That's something, when I was at Uber, it was very, very different, large scale, fast paced. It was because there was money in bank, and actually building a business doesn't work that way. And then what I'm doing right now has nothing to do with what I did before. So it's kind of a long journey for me to develop into what I'm doing right now as in my current role and in a sector that I've never had exposure in. So it's quite challenging and exciting at the same time because you get to work on a product that you are really passionate about, and that's something that I'm very excited about.
Right. Got it. There's this question I ask everyone, which is especially if they are brewing coffee or beer specifically, which is how does a person find their palate in coffee, right? Because there's a good example that I can give you from a beer perspective, which is you have wheat beer, you have lager, you have IPA, you have stout. Now, if you are someone who likes wheat and then goes in and tries a taster of stout, and if you are not an evolved consumer, you will turn around saying, oh, that place serves bad beer, right? And that's very common. Same thing in coffee, right? It took me, I think somewhere in 2017-18, I think I did a coffee workshop with a brand, and I learned different types of as basic as what are Arabica and Robusta and what are the types of roasts, etc., which is something that normal consumers don't know about. We've all grown up having South Indian filter coffee, for example. Yeah. That's our palate. We love everything that tastes similar to it. Anything else would be very difficult, which is probably a case with cold brew. It's an acquired taste. Very, very hard for somebody to sort of fall in love with it in the get-go, right? So how do you help, or is there any tip for any consumer if they were to find or if they were to figure out what is the best flavor that suits them?
Yeah, I think Rahul answered that in I think the whole idea about democratizing coffee. I'll give you a little brief that India has to first start drinking massy coffees. So they have to start drinking wheat beers of the coffee to move to the stout. So first they need to drink a lot of hazelnuts and your caramels of the world, which is your milk cold coffees, your iced mochas, and then transition to pour overs and black coffee. I think that journey is now happening, and it is happening in a like it's happening faster than expected, but it's still not there with other developed countries, in my opinion, where every third person will have a French press at least, or a mocha pot. That is a long way to go. I think how to identify what suits your palate also comes with lot of trial and errors, right? You have to keep drinking so many coffees, and you have to keep consuming it at your house or at your office or when you're stepping out. And that's where all the new age D2C brands or your instant coffees or the cafés, even like ours, is that's where the whole idea about trying different things comes into picture. So that's, in my opinion, is a journey that someone takes from a hazelnut to becoming a cold brew drinker. But it has to start from hazelnut and your sweet sugary coffees.
Yeah, because see, typically in the West, if someone starts to drink coffee, they probably start off with their dark, tall blacks. In India, and Vardhaman is an exception when he said that he started drinking black coffee. He's one in like 10,000 people in India who would start to drink their coffee black. Everybody starts with milk, sugar, and now flavor is the new addition to it, right? So you have to start off on this journey till the time you reach a particular stage and try a good coffee and then kind of graduate. So you need to kind of graduate from your wheat beers equivalent to say cold coffees to stout, which again is an acquired taste.
Yeah.
So yeah, I think it's going to be a journey of a lot of experimentation, openness. But the first step is India needs to drink coffee at a insane scale for specialty coffee to make sense, which at the moment is very, very small. Not even 4% of India would be drinking coffee.
Right. Got it.
Yeah. Correct.
4%, right? That's a small, very, very small
compared
number.
to about say a 15 to 20% in Western part, right?
Right.
And they just not, it's about more penetration. It's also about more frequency of consumption, right? Here in this 4% that drinks, frequency of consumption would also be low at a per capita level, per person level, right? So there it's a twofold effect. A bigger pool drinking more, a smaller pool drinking lesser. Yeah.
Right.
So massy coffee needs to be the first trend.
Right. Makes sense. Is there any story history on how coffee came to India? Or is there any, like, you'd know, I'm assuming, because I don't. And I don't know anybody else who would.
Story, what I remember is the whole, there was this Sufi saint called Baba Budangiri. And when he was traveling from Yemen to India, he had some coffee seeds that he traveled from Yemen, and he reached a place in Chikmagalur where he planted the first few seeds.
Wow.
And that's where there is a mountain called Baba Budangiri in Chikmagalur.
I see.
That's where they say it's the birthplace for coffee.
Oh, interesting. I didn't know that.
Yes.
Right. One thing that's been so clear with Bonhomie at least is that now you've gone through a subtle rebrand in terms of how you're positioned, right? Now it's everyday coffee at everyday price.
Yes.
Right?
So, yes, that's
which is very different from what the brand has started out. So, I'm assuming there was a moment somewhere that you looked at it and said, okay, now it's time to pivot and be less purist and look at it more from the lens of what the mass market wants, right? It's a tough thing to do as an entrepreneur in business, because reason why we all start out is to achieve that self-actualization kind of goal, and then in somewhere it changed, and that requires a lot of capability to let go of what you really want and then trying to do this. So was there a moment where you guys sort of felt that this is now the new direction, and how did that conversation come about? I'm curious.
So basically the cold brew product was great, but
it is
but like you rightly said, it's an acquired taste,
Yeah.
and then it's not for the masses, to put it that way. what we kind of realized, I think the eureka moment for us typically was that what India has accepted at scale is westernized version of coffee, like a cappuccino, latte, americano, mocha, right? What we felt is that while people love going to a Starbucks or a third wave, the 250, 300, 350 rupee coffee is not an everyday coffee, right? So, spoke to a lot of folks, and the directional understanding was that if the pricing is kind of in a zone where it's everyday, then consumption of those products can go up in a big way. So let me just ask you, how many times would you go to a Starbucks in a month? 4 times, 5 times at best, right?
Yeah.
But if I have to ask you, where can I get a good Americano at an everyday price point? I want to go to that place every day. Does a place like that exist in the organized space?
Tough.
Directional answer tending to no. Right? So what we realize is that we have created a great backend for the coffee by owning our manufacturing and everything. The same backend needs to be plugged into doing something where we can democratize coffee and sell all versions of coffee at a 99. So that's everyday coffee at everyday prices. And we don't do Cortados and pour-overs of the world.
Yep.
Because even if you are to look at the most or the biggest specialty players, Cortado, pour-over or these versions of coffee don't even bring 5% of their entire sales. Won't name the brand, but at one of the brands, which is like one of the biggest coffee brands, their best seller is a chocolate-based drink. And at another place, it's their hazelnut cold coffee. These single SKUs in these places are bringing about like some 12-13% sales for the firm. So even after going to these specialty places, people end up having flavored coffees to a larger extent. While they would have, the positioning is specialty coffee, but the main consumption is happening for more massier flavors, because that's how the consumer palate at the moment is, which it will evolve.
Right. So were there any specific things you guys had to do from a branding lens to change this sort of perception?
Not, I mean, in the sense, more than brand, which is happening right now as we speak, but mindset change was extremely important, I would say, because bringing in fresh perspective for me to understand how retail works, because from him and learn things from him, like how does it really work. It's an ops intensive business. Location is key. These type of things is something that we like. I had to understand from him that that's how we will be able to scale up. Right. So
these were the hard changes, but I think on the softer aspect, what we realized is that Bonhomie, at least in Bangalore where Bonomi has been there, Bonhomie has become synonymous with cold brews, right? One important part there was to how does Bonhomie as a brand break out of the image of cold brews and then stand for something not so purist as it did at one point in time for something purist. So I think that has been a big journey for the brand. And I think what we realize is the biggest coffee consumption is happening by younger folks, right? They feel coffee is the cool drink. नहीं चाय नहीं पीना, चाय का ग्लास पिया जब दादी ने डांट के पिला दिया, else they just want to stick to their coffees, right? So I think then basis this learning, there was, so one was our own personal journey of breaking from purist to non-purist. Second there typically was how do we educate people on this, that Bonhomie doesn't stand for purist anymore. So what we kind of realized there is that it needs a big change. Basis the TG, basis the flavors, we need a very big brand change. So Bonhomie is kind of transitioning now from Bonhomie, and it's being rebranded to Drickle to kind of make the appeal more better. We've also taken a flavored coffee positioning. So the name should kind of justify the vibe that we are trying to do. Bonhomie will no more be the green and the white that you typically see, but would be a burst of colors, since we are a flavor company. Colors depict flavors. And the new branding would kind of justify the current offering of Bonhomie.
Makes sense.
So
would Bonhomie be the parent org? And
yes, Bonhomie will for sure be the parent org.
Entity name is the same.
Yes.
But the brand would be Drickle.
Brand,
It's got a nice ring to it.
So
I'm assuming it comes from drip. Drip, is that the origins of the word? What does it mean something?
So drink plus trickle.
Right.
So Drickle is something that he wanted to.
Right.
Because we typically felt that if you're going to be flavor heavy, then there's going to be a flavor for every mood. A coffee for everyone, a coffee for every occasion. The way I'm trying to say, think of like trickle as a flow.
Right.
And flow is like a mood. So a coffee needs to be there for every mood. Like maybe for a gym mood, there needs to be an Americano or cold brew. But for your evening chill out mood, there needs to be a tiramisu cold coffee. Or maybe for your morning getting out of bed zone, there needs to be a cinnamon cappuccino, right? So a coffee for everyone, a flavor for everyone, which is occasion agnostic and more focused on coffee drinking or making coffee more palatable, because that's how India likes it, flavors and milk and sugar. Yeah.
Right. Interesting. Very interesting. I also want to ask, how did you guys meet? I forgot to cover that.
Yeah.
So I've known Rahul because I used to work with Rahul's wife at my last edtech startup.
Right.
And we were colleagues together and became very close friends. And then when I was raising a round in 2022, him and his wife also participated and put in a small check because of cold brew and the product, etc.
I only put in that small check because this was the first instance of me liking a black coffee. That was the only reason I kind of put in, and basis the depth of things he went into, wanted to make manufacturing the ethos, because a lot of these coffee chains typically go to a vendor and say, oh, create my coffee, this is the MOQ, this is the amount, this is the pricing. He kind of went in with a product first approach, went in very deep and created something that I was shocked that I like this. So that was the key reason, and I felt like maybe it's the beginning of something big and new in India basis black coffee. So that was the part that excited me the most.
Very interesting. This bit of owning your own product versus contract manufacturing, is that like, I often look at a lot of brands. I mean, we work with so many brands who come up, and a lot of them, if you go behind the scenes and trace, end up having probably the same contract manufacturer as their competition, right? With very little variation.
Yeah.
And it's just the nature of today's business, which is growth at all costs. And typically these funded businesses, when the consumers have very little information, like we just spoke of even in coffee. So if you're starting off today, is there a keep the purist aside and you think of it from a business lens, is there a right way of doing it, of investing into that initial capital and building out your own IP on product versus finding a contract manufacturer? Like if a 25-year-old today was to start off, let's put it that way.
Sure.
Is there one or the other in terms of what's a better way?
So if a 25-year-old is starting off with a lot of capital in bank and kind of wants to first create a brand, product for him is second, then going through the route of contract manufacturing makes sense.
Yes.
But if there's a 25-year-old who, in spite of whatever exists in his bank, wants to create something that he's known for as a brand with time, right? That is when you kind of need to go in a direction where you are innovating, right? So it will always be a question of what are you trying to do. If it is about getting a pie of the massy market, then either approaches works. But if it's about innovating, then kind of going into a zone where you're owning your back-end IPs kind of brings a different kind of a nuance. I think of it this way. Well, contract manufacturing didn't end it, but if Coca-Cola had to contract manufacture, Coca-Cola wouldn't be Coca-Cola. I hear these funny, weird stories that there are some potions and formulas locked up in 6 different lockers, 2 people can access, and the product is still relevant, right? Because we see many other cold drink brands that have come in and gone, and Coke and Pepsi have been the most relevant. I think the taste has just been the same. So it's about what you want to do, plus a function of capital in bank. I think there's no right, there's no wrong, but I think for us, the calling was manufacturing, owning things, and with this new direction where we want to democratize coffee and say sell a freshly brewed coffee glass at 99, there is no way we could do it through a vendor back approach, because so the margin that we are saving by not paying to a vendor is the margin that maybe we are making and still serving the same quality coffee
Yes.
to a
Right.
customer. So
Right.
it all depends on your positioning, direction,
Yeah.
and what kind of a person are you. So there's no right, there's no wrong.
Would you be able to do that at scale also? If you were to now expand, let's say, to 10 cities, 20 cities, would that same principle hold good? Because often in F&B startups in general, right,
Yeah.
scaling is and maintaining quality is always a challenge, right? Some like I know folks at Corner House who often said we have food capability to manage Bangalore and a little bit beyond,
Yeah.
and as a result, they've never gone elsewhere because they
Sure.
feel that's the limit. Beyond that, it dilutes the product. And I've had a lot of other friends who are running F&B startups who said, no, I want to scale, and they've figured ways to do it.
Yeah.
Yes, there's about 10% here and there, a difference in the product from when it is hyperlocal versus when it's slightly scaled to being a multi-city format. That's a challenge, right?
Yeah, it's always going to be a trade-off,
Yes.
right? I think this is a problem that every F&B brand in India is facing, that how do you kind of maintain the same amount of quality with scale? Some are so attached to the product that they kind of don't want to scale, and there's other lot, I think, which we belong to, will find out ways to kind of maintain consistency. So while self-manufacturing is something we started off on, created our own products, IPs, I think we'll be good enough to kind of go to 40-50 outlets if we have to. But if we want to scale beyond that, post that, then I think we need to kind of get back to the drawing board again in terms of what works better.
What
because
works, yeah.
manufacturers at scale, even say the biggest bottlers of Coca-Cola in India or say PepsiCo, for some of their products, they in turn have a co-packer as well, right? So it would all come down to unit economics and what is worthy for scale. But again, at the end of the day, the core company owns the IP on the product. What is best to scale up from a standpoint of cost and consistency will be a question that every company will answer in its own way. But for Bonhomie, I think we're good until the mark of 40 to 50 outlets.
Yeah.
Post that, it will have to be well thought again.
Right. Is the distribution also company owned, or is it through distributors or third-party partners?
Through company.
Okay, got it. And is that something that you want to keep as part of the organization, even you scale? Because I learned this about a year or two ago on the podcast when someone explained to me difference of Coke and Pepsi and how they distribute. So Coke is company managed, but invariably because of demand and supply problems, there's always some outlet somewhere it's out of stock. Pepsi, because it's decentralized and it's always there for distribution, but then it's tough for you to switch from one product to the other because of legal contracts, all of those things. So people often try to have flexible contracts where you can switch, right? But I didn't know that that's how it worked until that point in time. But for something like your product, which is also bottled, how do you see that?
So I think for our outlets, since we are going to be real estate, QSR, quick coffee outlets, I think there it's more about distribution through our own outlets.
Yep.
But in the business that we have, where we supply to bars and pubs, whether it's the cold brews or iced teas or syrups and cordials, at the moment, since it's Bangalore, it's home turf, what I've realized is what a distributor does well is doesn't let your stock go out of stock in a lot of places, helps you maintain credit cycles. Like if I'm dealing with a brand directly who I'm giving to, the credit cycle might go into 1 month, 2 month, 3 month. But working with a distributor gives me that flexibility that once he's picking up the goods, I'll get the payment within 30 days. And then how to kind of get it from the next party is on him. So he's someone who kind of helps streamline the entire process, doesn't let your product go out of stock. But what I've realized right now is that a distributor might not be key way of cracking new accounts. If I kind of feel that I have 10 accounts right now, I go to a distributor and I'll have 20, that might not be the case. Having that BD feet on street will always be on the company. Right? So till the time we reach like a minimal threshold in terms of our brand being there at say 50 places, and then the word of mouth automatically bringing the next 10, and that dominoes effect starts. Till that point, a distributor wouldn't make sense, but maybe in the case of Bangalore, we might make an exception. But if we go to other cities, I think going through the distribution model on bottled products is going to be key for expansion. I think that's a cracked ecosystem.
Right.
But whether you want a distributor in the form of a e-com or a GTMT or a Horeca distributor will be a call which will be a call based on time and business
Is it
practice,
also
yeah.
because the product in itself requires a bit of it's not, I mean, cold brew for instance, like we discussed, is acquired. It's not so easy to sell either, right?
Yeah.
It requires maybe a little bit of convincing persuasion. So maybe feet on street then is required for a product of that nature.
Short answer, yes, because a lot of education needs to happen.
Right.
You kind of need to give a lot of free samplers out, kind of need
Explain
to have
them.
like tasting sessions at different places. So the product kind of needs to be put out there for folks to try, and then maybe someone again coming and having a black coffee, which we realize is very tough in a market like India, because first people, like I first said, people first need to drink coffee. Right, so now Bonhomie is going in a direction where the idea is to make India drink coffee at scale in the way they like, and cold brew, while is a great product, will start building good traction, good relevance at scale in 5 to 10 years from now, not immediately, not 5 years back.
Right.
Bonhomie through cold brews was like ahead in time, way ahead in time.
Right.
Yeah.
Fair.
So I think
Absolutely.
we got the timeline of the ordering wrong, but the product right.
Yeah. I was just thinking as you were talking about it, which is I remember being in my final years of school, early years of college, and we would go to cafe coffee day because that was the most recognizable outlet out there, and coffee was incidental. You went there because you wanted to chill with your friends, have a good time. But I see that changing now, where people are now hunting for good coffee, right? And if the place is not serving good coffee, then you're not chilling there also. So we are in that direction, right? And I've always tried to figure why is what is the reason for this sort of change that's come about maybe in the last 10 years. One theory I have is that cafes often allowed startups to sit in there and work, and that
use it as free
absolutely
spaces.
right. I am too. I started virality out of Costa Coffee, the old outlet on 12th Main, back when it used to be there. And for a month I sat there till they politely stopped refusing giving us entry in there. But that was one of the reasons I thought people invariably ended up consuming coffee, and then slowly I think that startup buzzword spread about, and for a while it was looked down upon, but then somewhere I think it's found its place. But do you guys have any theory, at least you, Vijay, in terms of what has brought about this sort of wave in India?
I think a lot of education has happened. COVID played a huge role. Like I've seen so many people who have started brewing at home during COVID. They understood and they were open to trying different experiments, time in hand, and they couldn't go out to cafes, so they wanted to bring the cafe experience at home. A lot of people started buying equipments. That played a huge role in my opinion. And now at least a good portion of people understand good coffee. Still a long way to go, but people who understand and have experimented enough know they have hand selected their own coffee shops. Like, this is the brand I'm going to stick to, and I don't want to go to any other place. And this is, if their espresso and their cappuccino is good, I'm going to stick to that. And that's where that experimentation and education has come in. But now what it should accumulate to is more consumption and more brewing at home is something that I'm still not seeing, which is happening in bits and pieces, but not at a scale where what Rahul was talking about, the Western economy does. Like, if you go to a Costco or a Walmart, there is a section for espresso machines there, right? There is a huge section. In Chroma, you will find only the same old machines that kept there. That has to really change, and that's differentiation has to kick in. That will take time because people have to start drinking coffee first,
right?
Which is the mass coffee.
I think one of our thesis also was that if people love coffee so much in India and all these coffee shops are buzzing, then the at-home market should have already picked up or will pick up. But one of the theses that came in is that people just don't go to a coffee shop for coffee. They go there for the vibe or a particular occasion. It's not always about the coffee. Let's just say if you and I had to meet and chat for an hour, we would end up going to a big format coffee shop. or like reading a book, meeting an investor, giving an interview, going on a date. Because the underlying occasion there is not just coffee, but I want to spend 1.5 hour at a place. That is where big format coffee shops made a lot of sense, even beyond coffee, even beyond the love of coffee. But I think we are the inflection point of where, like he mentioned, people have started to understand what a decent coffee or good coffee is, or even if they don't, curiosity has now built in to try different versions of coffee. Now what it has come down to is that we need someone who can kind of bring in the aspirational coffee to Indians at scale, because if the price point in a big format coffee shop is restricted to 250, 300, the QSR format or the real estate based coffee culture in India would be limited only to a small percentage in India, which needs to change drastically, because people going out, experiencing different things, all of this on the rise. But a product that can kind of, on the coffee front, that can supplement that need, that is a big gap. So what we are realizing is latent demand exists, but kind of the right supply which can be married with that demand is a big gap. It can be in the form of small format coffee that we are trying to do, or it could be in the form of at-home consumption by having more affordable espresso machines, or maybe not even an espresso machine, or like a frozen espresso shot that is easy to use, right?
Right.
So yeah, I think the coffee market is going to grow, but what is going to be the right format, whether it's compact espresso machines or frozen espresso shots, or better B2B coffee vending machines at offices, or the small format coffee that we are trying to do, right? That is a bit that is still being figured out. But coffee is here to stay and grow in a big way.
Right.
Yeah.
Right. Cool. Now that we have our coffee, I think now we can go a little deeper into a few of the things that I wanted to ask you guys. Top of the list is fundraising, right? I've personally always been wary of the idea, because I think my DNA is of building more traditional business models, and as a function of which I feel it has very little role, or rather VC money has very little role in it. But I followed your journey throughout. I think one of the most interesting bits about this has been the fact that apart from the traditional institutions, you got a lot of your customers to come on board, right?
Yeah.
Like Rahul, your story is the same. My story is the same too, if you look at it. I think it's a great validation when you get your customers to put money and who want to be part of the business. But I want to know, what was the I'm sure fundraising has always been part of the business, but that last round probably, which was, or if you want to just recap what rounds you've had and who have been the supporting entities throughout the journey, we could probably discuss that too.
Yeah, so we raised our pre-seed round in 2022. This was mostly backed by customers and couple of notable angels in the tech community.
Early believers in the cold brew product.
And after that, we raised our seed round this year in April. And over here, we, at least Rahul and I, are very clear we want to get strategics on board. So we raised it from one of the family offices based out of Delhi, and they are the biggest bottlers for Coca-Cola in India, and also have also run franchises for Subway. So master franchise owner for Subway. So they had this mix of, one is understanding manufacturing and also QSR space, etc.
Because our ethos also was that even if you want to build a business with growth and hyper scale, we want to be profitable at different paths in our journey. So the way we think of profitability is like a sine wave. There should always be like a line of sight ki, okay, I'll get to this number in 3 months, 6 months time, not 3 years, 6 years time. And the manufacturing that we had, so I think that clicked very well. We raised about 3.5 crores in the pre-seed round. Fast forward to today, basis the new direction that we are headed in, which is compact coffee QSR retail, which is actually similar to this brand called Luckin Coffee in China. It's a very scaled brand in China and kind of disrupted the gap or the latent demand that was created by Starbucks in a way. So I think this is a model that has garnered definitely more interest than cold brews from investors. So a family office who are the biggest bottlers of Coca-Cola in India, also holding a decent stake in Subway Master Franchise, put in a check in Bonomi. In the seed round we closed in April. So cumulative we raised about a 5.5 crores in the seed round, which is typically our growth capital. I think this round was to kind of get in a lot of strategics on board.
Yep.
So the Java Rain estate owners, it's a luxury resort based out of close to Bangalore. They also have beautiful coffee farms. That is where we get our coffee from as well. They are our investors. Also, Vinay Bhopatkar, who was the CEO of CCD, felt like this is the model which can actually make money in coffee, because if you have to look at the wider landscape, not any coffee retail company actually makes money. So yeah, a lot of appreciation from strategics who came in. So this was a round typically led by family office, QSR brand owners, ex-coffee, ex-QSR, CXOs, and yeah, customers once again coming in this time as well.
Right. You know, I was following that entire journey, and as we all know, Vijay is a Twitter celebrity. We are going to blow up this podcast on Twitter after this for sure, right? But I remember Vijay putting out a series of tweets, and then I was following, and I remember reading your, I think, LinkedIn posts as well.
Yeah.
One of the things I remember, which Vijay you posted, was about how raising from an estate actually solved for supply chain in a lot of ways, right?
Yeah.
And how critical that is. But I was also thinking, can that work as a double-edged sword too? Because now are you in some shape or form obligated to do business with them? So are there scenarios like that arise?
Actually not. It's more about someone puts in money in this stage at a company basis the gap that you're solving, and also a very big punt on the founders, right? There's no obligation as such to work, but I think believing in an advice that comes in from someone whose USP has been doing a particular thing, and especially the advice coming to someone, especially in a company that he or she has invested, kind of creates a smaller loop to kind of creating a belief in at either ends, and like kind of going into the right direction. Because I typically feel he's an investor, he may be saying the right thing, or coffee is his core, so might as well take that advice and kind of take a leap of faith in that direction. But I think investment is investment. It comes with no strings attached. It's more about kind of growing the business and giving a return to an investor and not helping him increase the sale of his core business, to put it that way. Yeah. So
on that note, is there a archetype for a good investor? Because often at times we hear these stories, and we were just discussing one off camera, which is about how things can go typically wrong, right? So from your experience, because you've had multiple rounds, is there an example of a good investor? And to people, are there examples of a bad investor you should be wary of? We don't want to take any names, but you know.
I think good investor Rahul has briefed, like we have quite a few on the cap table who genuinely want to help you, and they will reply to your updates and then tell you, can I connect you with this person? Do you need help with this problem statement, etc. The strategics we gotten in the seed round, some of them he's in touch, some of them I'm in touch. They help us with solving problems at scale. Like this problem might come up, you guys have to be wary of that. So those are some of them who really look after you, or they stay in touch with you, etc. People who I feel who start micromanaging or get into your day-to-day businesses, start questioning you on your monthly level activities, etc., and meddle with your decision making, I feel those are the investors you should watch out for, in my opinion. That's something that the freedom that founders require is of extreme paramount.
Yeah, I think it's all about patient capital coming in from the right folks.
Yes, absolutely.
I think maybe I'll describe it in a way, if we feel that a check that someone is putting in will make him get up every day and think, oh, I had given this money to Bonhomie, how's it doing, right? Maybe that investor may not have the right risk profile, or you have taken more money from him than his risk appetite. So to kind of like put it into right words, someone who's patient with capital and is investing only to an extent that he's not losing sleep over what he has invested in your company. But what we have also learned the hard way is that at the end of the day, money is money. While one would have caveats on the right investor persona, but when it comes to kind of sustenance capital or growth capital, even if 70-80% of the money is coming from the right folks, a lot of folks go into the direction that we don't care about a particular kind of an investor. Money is money, let's just take and run. So I think biggest key is that he should be patient and don't take any money from someone that kind of gives him jitters every morning. Else it'll turn out to be a tough relationship to handle.
Right. Interesting. You also had a very, I think, popular LinkedIn post which I came across, which is about how you advised people who are building offline or F&B businesses to look at more family houses rather than traditional VCs. So where did that insight come from?
I think what has happened in the last 10 years is that startups had to start in India, and a lot of capital had to come in, and this industry, if I have to talk about 2010, started taking off in a big way, right? So pre-seed, seed checks were also written by a lot of VCs, and templates actually existed that X money at X valuation, irrespective of the stage of business that you are at. That kind of flattened out by 2021 because a lot of investments were made that shouldn't be made. A lot of things, due diligence could be better. So I think a lot of prudence on the right kind of companies to be invested came in. Plus, everyone is raising funds from somewhere. Returns have to be given. So I think the risk appetite, or maybe the direction, focused more in the direction of investing in companies with some sort of PMF in place. When this started happening, and by that time this ecosystem had grown, say 21, 22, even the Indian family traditional offices had seen that this could be a market or a way for them to create their next phase of wealth. Because in a lifetime you can do 1, 2, 3 businesses, right? But if you have to look at what the Kamath brothers are trying to do in a big way, you can create a great business like Zerodha in a lifetime, or maybe 2, or Mukesh has done maybe with Myntra or CureFit, but be able to create 6, 7, 8, 10, it's not possible. Then you kind of use your expertise and capital to kind of work with X people, N people simultaneously, right? So what happened is VCs wanted to kind of give a lot of returns to their existing investors, wanted to invest in businesses that have proven a particular part and are now in the journey of insane scale. So the growth capital shifted totally towards the VCs. But a lot of angels, see what good things have also happened in the last 10 years in terms of a lot of founders, CXOs, investors also benefiting from startups that were acquired, startups that got listed. So wealth creation also happened at their level, right? And when you benefit from something, you feel even more obliged or confident that investing in this direction is something that I understand or can bring in the next phase of growth. So I think a lot of angels, CXOs, family offices, or maybe syndicates, a lot of founders who have maybe exited part secondaries in their Series B, Series C, or have their companies acquired, have created a decent wealth pool. So a lot of them come together and operate like a pseudo VC in the form of a syndicate, right? So I think it's all in a good direction that the ecosystem is heading, that the big bucks are now going in a direction of typical growth capital of PMF proven companies, especially for sectors like us, which is consumer brand heavy. But if I have to talk about AI, deep tech, defense, I think VCs are still writing a lot of pre-seed and seed checks in that zone. But for consumer businesses where growth is linear,
Yeah.
or you're trying to innovate in a space or trying to have a piece of pie of a big market. These are the kind of businesses where pre-seed and seed have shifted
Right.
more towards family offices, angels, CXOs, and syndicates.
Right.
Yeah.
And apart from that, is there any other stark difference in terms of are they more welcoming of traditional models versus tech VCs who often look for more
Good question.
blitzscaled or
Yeah.
blitzscale friendly models? Let's put it that way.
Yeah. I think one key change that I'm seeing is which VCs are trying to bring about in scale logs. Family offices. Okay, so let me put it this way. Metrics that were expected at a Series B stage are now expected at a Series A stage. And metrics that were expected at a Series A stage are now expected at a seed stage. Which means a lot of family offices, and their ethos has been years of deep work, always focusing on profit and trying to support brands in that direction. That is one approach, right? VCs are also now moving in a direction that money has gone into creating a lot of ecosystems. Now the returns needs to start coming in, which is in the form of profits, exit, whatever it is, right? So there is a natural vibe of profits. Somewhere there is more of an ecosystem based change. So what is now happening is, even at a stage like ours, people wanted to see that you should get profitable in a few months, a few quarters. So with PMF, line of sight on profitability is also expected, not just an insane scale. So it's like trying to combine, folks are trying to combine best of two worlds for the goodness of the ecosystem only. But for firms like ours who are trying to raise post 2021, 2022, fundraising and the amount of time and the amount of rejections,
Yeah, it's
turmoil
become difficult.
one has to go through is difficult. But I think if you have to look at it from a long-term standpoint, maybe we'll be benefited by it by having the right DNA in place for 2 to 3 years from now. So I think a systemic change is coming in a big way. So yeah, raising capital was never easy, and it is definitely not easy.
Not
right now.
easy.
Yeah.
Right.
Yeah.
Right. Interesting. I want to just come back to that the raising from your own customers bit of the story, right? Which is, was that ever part of plan to raise money from your customers?
I'll tell you how I was thinking about it. So 2022, when we were raising, I did not have any network per se. Like, can I ping him to connect me to this person? Can I ping him to getting me connected to this? We just had one platform that was my own personal Twitter, and I was like, there is no other option. I will just tweet it out and let's see. And so I put out a tweet saying that this % of the round is covered from my friends and family. This % of the round is left. And then I was bombarded with messages from unknown people. And then that's when I started getting on a call and explaining them the model. And these are people I have never met, never interacted. They didn't follow me before on Twitter. They've tried Bonhomie. Some of them have still not tried and invested. And so these are people who are now part of the cap table.
Right.
So that's how it started. And some of them doubled down in our existing new round as well. And then these investors connected with their network. That, do you need help with connecting with this? Some of them worked at big tech offices. Can I connect you with my CEO types? And that's how the chain of network happened in our second round as well.
Understood. Got it. Very interesting. Did they all participate in subsequent rounds too?
Some of them participated in the new round
Right.
that we raised. They doubled down here. When we reached out to them that we are raising, so
Right.
yes, they did participate.
Right. I feel there's an interesting trend that's happening where a lot of corporate employees or ones who have a lot of surplus sitting in their bank are now choosing to invest in startups and And in general, I think there's a change coming where it's no longer put into fixed deposits and where they're earning 6 to 8%, whatever the interest is, right? They're choosing more riskier financial models. And if you look at the number of people who have in the last 5 years probably started trading or doing crypto or any form of investments, it's significant rise to before, right? So I felt in 2020, 21, 22, a lot of this happened where people were investing into startups and into other modes of non-traditional financial instruments, and as a function of which, I think a lot of startups also come in that middle space, bridging these customers with potential investment opportunities, right? Like one was an Infinyte Club, which you guys used.
Yes.
I didn't know anything about it, and right, I had to get on board obviously to be part of the round, and went through it, and I was like, okay. Then I also discovered AngelList, who does something similar now.
Yeah.
This is quite interesting in the sense that it's actually democratized and made it easier for people who want to be part of it, right? So I don't know too many startups who have gone through this process, because typically I think there's a lot of questions on how do I raise money, how do I do the paperwork, who takes care of it, etc., etc., and that also puts people off. But I just want to know from your point of view, where you were using somebody like an Infinyte Club, what is that experience like? Is that something you'd recommend to other founders and startups if they were choosing to raise from non-traditional VCs or institutions and choosing from a large number of investors? And how did this come about too? I'm curious as well. How did you discover them?
Infinyte.
Yeah.
Okay. I'll first answer a second question. I recently shared with a friend of mine who again raised from his own customers. He runs an apple juice brand, Tons Valley, from Himachal. Backward integrated. He has his own apple farm, and he converts them into juice and sells it. Was not able to raise, doesn't understand VC world, Himachal. Yeah, so he raised it through his customers, and he was struggling with paperwork and how to go about it. And he got advised that, which I learned from Rahul, about not messing up your cap table. And then I told him that we used AngelList and platforms like Infinyte, and it was so smooth for him, right? The whole entire process and the support, how it appears on your cap table, the legalities are covered. They have their own legal teams, so it really helps.
Yeah, because if friends, family, investors, or even syndicates are putting in checks, some amount of DD at some level needs to happen. Not like a deep dive, but at least basic legal DD in terms of entity being registered, you having a separate share capital account. For a long time, people have been using their current account as a share capital account.
Yeah.
These are things that one discovers. You shouldn't have like every person on the cap table, because if you want to go through the VC route and you raise like small checks from 100 folks, they sitting on the cap table, decision making, moving ahead becomes faster. So VCs typically say first clean your cap table up, right? So there are post facto ways of doing it as well, but kind of taking the learning coming from the ecosystem, platforms like AngelList and Infinyte give a lot of opportunity to kind of keep your cap table consolidated, giving confidence to other other investors in the form of basic checks being done, not like 100%, but like close to that mark, and taking it from there. So I think a lot of these models will come up even today, like you mentioned, registering your company, understanding, applying for a DPIIT certificate or whatever it is. All of it is still in an unorganized space. A big opportunity exists there to onboard someone who's just starting up, helping him set the company up, because a founder would start off with knowing the business or the gaps, but these things kind of take a founder's second attention, but should actually be primary, because then kind of improving things or rectifying things 1 to 2 years down the line is a big pain. So a lot of hand holding and opportunity exists in this space.
Right.
Bonhomie has done a lot of things where right advice would have come in. Journey on paperwork would have been easier. We have learnt it the hard way. But I think those learnings are going to stick for long.
Right. So if someone's wanting to go down this path of raising money, they probably should get legal counsel on something like this right at the start, right?
Yes, definitely. A lot of startups start thinking that a council is not needed. I would recommend not just a council, but a good secretarial team from day zero is important, which is your CS, an auditor, a council, right? Who have worked with a few startups before, who can guide you in the right way, because a few thousands, a few lakhs spent on day zero would be much lesser than 5x, 10x amount that you would have to spend in terms of rectifying and complicating threads within your company in a big way. So I think the first set of folks, even if it's a freelance team to get on board, is these three folks, and everyone else can follow. Yeah.
Interesting. Got it. I faced something similar. When we set up the organization, I mean, I was so young and did it out of, eagerness rather than anything else, right? So I didn't build capability, for example, of enough authorized capital to dilute and create an ESOP pool. So I had to do it much later than I've done initially, because also traditional business, we never even knew it would become as big as it is.
Sure.
So it was, I agree. I think
Very
it's required.
Yeah.
By the way, you guys can ask me questions too. If anything at all, we can make it two-way. I have like 3-4 things to cover.
Okay.
But if at all anything, feel free to
I actually have a question for you.
Sure.
Basis the work you have done and the progress you have made, do you feel for your next phase of growth, insane growth capital needs to come in to kind of take it to the next level? It's always a choice, right? Do you want to grow a business sustainably? But the way things have been going for you, things I've been hearing have been pretty strong. Do you think it's now time to switch gears to raise growth capital into like hyper growth mode? Is that a thought that has crossed your mind?
I mean, it has, and I've given it thought from both sides, the plus and the minus of it. There are benefits to it, of course, but I feel the business of advertising is so people and human centric, right? You can have all the money in the world, but if your creative team is not able to say come up with an idea, then all that capital in the bank means nothing. So getting the right mix of people and creating a great environment is more critical than actually having great amounts of money in the bank to be able to fund anything of that nature. Also, we are going through that age where I think content, ad, and what is brand is all murky now. There is no differentiation of these three things, right? So often at times people say where there's chaos, there's opportunity. But in this case, I feel it's different. Like I sometimes speak to 3 different brands on the first call. All 3 are saying the same thing, but they are saying it very differently. So it's a reflection of where the market is today. So if you have a playbook on how to scale, it's not necessarily going to work for the second or the third brand that comes into you, not because of market factors, but because the people on the other end don't look at marketing the same way as you or your first client looked at it. So it's hyper customization is required in today's world. And as a function of which you can't build scalability quickly, or you can't build systems for scale. It's becoming more of a specialized service. And by that also, I think I'm in a good space where we aren't priced too low. At the same time, we aren't priced too, say, extreme end on the scale either. We're somewhere in the middle. Okay. As a function of which you're able to sort of get the right fit of clients who come to us. So if you add more capital, could I accelerate it? I've tried it in the past. I mean, using just bank balance itself. The 1x doesn't go to 2. 1x goes to 1.5x, right? But in any other field, I think I could have got 3x. It's simple.
So are you saying it is the nature of the advertising business that it's a touch and feel business, and when it's touch and feel, it can't be hyperscale?
It can't. I feel it can't.
Okay.
A lot of agencies have been in the past scaled to 100, 200, 300, sometimes 800 people. And they are constantly in the business of holding fort between 800, coming down to 600, 500, again going back to 800, and then just keep playing that scale. But then the problem is with that, what happens is you start serving fast food version of creative solutions. Okay, that's a problem. Now, on the other hand, if you look at some of the great examples, and I think WiredIn Kennedy is a great agency, and I've looked up to them as a reference point for us. They are, I think, about 7,500 people in maximum in a branch, but they're in 22 offices around the world. So they've built a model of quality but in specific geographies. They failed in India though. It's a whole other thing.
Decentralized quality and boutique model.
Yeah.
Decentralized boutique model.
Yeah, I think, and because it also what's happening now in the last 10 years, I think, is the market is changing every 5 years. So prior to that, if you look at traditional advertising, they had long windows of probably TV came about and became mainstream, at least in the West in the 60s.
Sure.
And then if you look at it beyond, I mean, from there till 2010s, until social media came along, TV had a great glorious run as the hero, right?
Yeah.
And then obviously there was print, hoarding, all of those that came along with it. Radio also, people have been saying radio is dying since the mid 50s and 60s, but it still had relevance in 2000s. But since 2010 and since social media has come about, that change is too rapid. So it's very hard for you to find scalability today, because I feel we're still in that zone of evolution. So maybe 5 years down the line, when everyone's tired of watching reels, something new will come about, or maybe reels will start stabilizing as no longer being the novelty. And like we keep talking about how micro dramas and all those things come. So in 5 years time, I feel the market will settle, and then will come a blueprint which will probably have some leeway for the next 10-20 years for you to sort of replicate on. But today I don't think it exists. It's too risky to sort of bloat up to yourself to a large number, because to be honest, in our line of work, scale is a function of people. Now more the people, you also then need to plan for that many number of variabilities, right? That becomes a challenge. So
I have a follow-on question to this. So do you think, because of, I keep hearing, since my wife is a designer, that she uses certain AI tools now, it has become much more easier for her, and it's part of the brand design thing that it has become she's become much more efficient, she calls it. Do you think your workforce requirement can now be replaced with certain AI tools where video editing or certain creatives you can churn out faster?
Yeah.
The follow-on question I have is, I keep seeing a lot of creative content these days, at least in the D2C space, is very founder driven. They are putting themselves out there to create these videos. I was telling about Emlada to Rahul that the founder acts as a tailor in all his videos, and he's the face of the brand. And now people look up to him that, that he's going to come up in my reels as a performance marketing ad, right? What is your thought process on this? Is it trust that people see that whenever a founder puts himself that, hey, he's the face and I have like some sort of a connection with him?
So on the first thing, see, execution and operations is becoming a little easier on certain things.
Nice.
I think the biggest benefit of AI actually is time. You can do things faster than you were ever able to do otherwise. That's
Not
the biggest
more
benefit.
efficient.
I don't think it's necessarily more efficient, because I don't think AI is there yet to, like, people are talking about the liquid death ad, right? But if a human was to, if a crew was to make that same ad frame by frame, people would shit all over it with like 35 flaws that they have spotted in a 5-minute or a 3-minute ad, right? Because there were gaps in there from a filmmaking standpoint, from craft, because the cuts and the lip sync not being apt, etc. But today I keep saying this, that we have got to a point where our expectation of AI is so low, because we know it's not great, that any work from AI we start glorifying it and saying, oh, it's great, in the hope that someday that will become 100x better and we'll be doing great work on it. The baseline that I keep telling people is a good designer with AI is a great efficient output deliverer, right? Deliverer, if not a real word, but yeah. But the point is, you need craft. So now, how do you get craft? Craft comes with experience, with time of you keep doing the same thing, and it's a combination of a lot of things, wisdom essentially. So if you don't have craft, but then you use AI, it'll only give you the output to the limit that you can give it the prompts, right? So I think we are there in that today, right? Today content has become about quantity than quality. So as a function of which, a lot of these things are getting glorified, but I don't think they like cut the. But again, the beauty is human beings are making these decisions, approving these ads and these designs, etc. So then that's the filter. But from a purist standpoint, if you ask a filmmaker, they wouldn't say that the content that they see today is that great or it's inspiring. But there are some exceptions coming through. Like I think KFC did something recently for Onam, I think,
Okay.
with the Colonel Sanders AI version of him speaking Malayalam with 2 other characters from pop culture part of it.
I think
Pura
I missed
AI.
that. Yeah.
Pura AI.
Okay.
Wow.
Yeah, so that was nice. But that was nice because of the novelty, not because it inherently had
Okay.
great story, great craft, great filmmaking. No. So I think that's where we are today on AI. What was the second question?
Founders putting themselves out there.
This is
only.
amazing. We keep talking about this. Everyone wants to be Steve Jobs, right? I think, I think that's where I think the world is at. In some categories, I think it works because I feel if everybody is talking about business and then through their brand, and if there are, let's take coffee for example, and if there are 4 coffee brands and at the end of the day there isn't enough sharp differentiation, then probably a founder coming in and talking about it makes a difference.
Okay.
Right? But I don't think that's, to be honest, the case. Like there are so many examples we've covered in the show itself. Like Arindam Paul does a good job of it, right?
Yes.
At Atomberg.
Yes.
Yeah.
But I did a podcast with Ashok Lala and Karthik,
Oh,
and I think they made a very interesting point. I forgot which one of them it was, but they said, is Arindam's content actually helping people who are building electrical appliances, or is it helping digital marketers? Because I think a lot of his content overlaps on digital marketing actually. So, but that's his base, right? But so it's, I think that's not a bad or good thing. It's just I think he's playing to his strengths. So if you can break the clutter by talking about yourself, then I think it makes a difference to the business and comes back.
Okay.
But today I think the biggest problem is clutter, and I think the only way to cut out from clutter is creativity. So and we are in that stage of evolution, because if you look at US brands and I think we all agree that US knows what marketing is. They really understand the core definition of it, right? And that comes from doing a lot of things. When I think like a lot of kids there sell lemonades during summer break.
Yeah.
They put up stalls.
Yes.
So they're forced to be salesmen from a very young age. And as a function, I think some of it trickles into their later years and they're able to use it. It's a cultural thing. Here, we are all very introverted, especially when we are all so focused on studies as a society. We're not encouraged to go out and do other things. So as a function, I feel we all grow up not being natural at marketing, but we're damn good at number crunching. We're good at giving insights, analytics, stuff like that. So we over leverage on those bits, which is why, like in my field today, if you look at performance marketing in India, is like, at least in Asian context, I don't know much about China, but if I look at the other markets, we are far ahead any of the others. Like I went to Dubai, spent a week. I'm figuring out if we can go open an office there. Similarly in Australia, and I'm talking to folks there. They are doing things that we've already done 3-4 years ago.
Wow.
And we've moved on. So that's, I think, a function of our element of our understanding with numbers, data, etc. Right? But on creativity, you look at it, I'll still say US. If you look at Cannes Lions every year, the brands that win the best, most creative brands in the world are all US brands. So I think Samsung gets in there sometimes, but I think they're Korean. But but that's the nature of today's world. So, but we're learning. I think as we are getting exposed to business, I think the next wave of our just entrepreneurs will also pick up marketing and it'll start. I don't think we were doing this 10 years ago. I don't think any founder was doing a podcast 10 years ago. So that's changing. So I feel it'll slowly come through, and there's no real answer to whether it works or not, honestly.
Got it.
It's to each to their own. You have to just build frameworks that works for you.
Got it.
Yeah. So I think it's time to put your face on the on the coffee. We're real different.
We are doing a founder series, so we are putting ourselves out there. Yeah.
Perfect.
We decided that we have to showcase
I saw some
ourselves.
reels.
Yes.
I haven't gone through it in depth, but
Yes.
I've been seeing. I'll go check it out after this.
Yeah, the story is noob versus snob.
Ah,
So we've figured out a way. It's a funny take on all things
got
coffee.
it.
Yeah, because if one is to go to a specialty coffee shop right now, the scene is very intimidating for someone who's not so nuanced in coffee. Would you like an Ethiopian blend or a Guad blend? Would you like a medium roast, a light roast, and blah 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 blah, right? At the end of it, you typically see a customer saying, I'll have a cold coffee, a classic cold coffee, right? That's the Masi story. So what we are trying to do is create some humor, wit, and pass on knowledge in terms of it's okay to kind of not know a lot of things about coffee. You will discover it on the go kind of a thing, and making something that is more relatable to Indians at scale who want to go to a coffee shop but kind of find it intimidating of sorts. So basis his technical knowledge, he plays the snob and I play the noob, representing a lot of folks like me.
Got it.
Yeah.
So, I think one interesting trend in India at least is that our Gen Z are very hooked to the internet to consume for informative and utility content. We call that as you and I, right?
Okay.
It's one of those
Utility.
pillars. So there was this theory that I think holds good even now, which is the internet only has 3 types of content. Either it's utility information, entertainment, escapism, or it's relatability. Nothing else works. Like there is no other format of content, right? You have to camouflage into either of the 3 pillars or buckets.
It's interesting.
Yeah, interesting.
So the utility information has become a very, very big thing, which a large sets of people today, I think the conversation on that education is not really the structured school and university education is not yielding result for entrepreneurs at least, or if you really want to make money, is something that's getting accepted, and people are now turning to courses and add-on and other formats of learning to help enhance their knowledge, right? So if you look at it now, most popular channels that are growing on YouTube, at least on this segment, are doing breakdowns, journalistic style information content. They're sitting down and picking up a product and decoding it, explaining it, the kind of stuff Food Farmer used to do, right?
Yeah.
So I think that's the kind of things that's really, really growing, and I feel that is like one format that I think every brand can look into. So we have like fintechs who have never wanted to do this, but then they're like, hey, listen, we're getting left behind. What do we do? So they're hiring anchors or actors, like struggling junior artists, right? Paying them to appear in videos and then shooting like 10 small 1 minute to 1.5 minute videos and then scheduling them through the course of a month to ensure you get social traction. Because that's the kind of stuff that will cut on Instagram, right? Whereas today I was in a meeting and someone is saying Instagram is all for reach and there's a marketing head and he's like, it only brings us eyeballs. If you really want to engage, then we need to make like 5 to 7 minute of the same material but on YouTube. And go deeper dive into like what a Dhruv Rathi would do, for example.
Okay.
Right? Onto some subject. So I feel that content consumption has become a big source of learning for Gen Z in general. So if you deconstruct the difference between a cold brew and Americano, for example, and do a very interesting take on it, and it doesn't even need people, just visually led, it will make a huge difference. I think people will be a lot more interested to then follow the page. And so information is like a big thing today. It's like a drug. People really love channels that put that out.
Information in a format that is easy to consume, more relatable, and entertaining. Yeah. I think while he started off on Twitter with his mental health and coffee journey, I think I have always been socially shy saying this on a podcast, but for me, I think the journey of being more available, more present on socials is going to be Bonhomie led. And in addition to the things I know, right now I think putting myself out there looks like a chore or a task.
Yeah.
I am yet in the zone of finding a spot in terms of what I like the
I
most.
really enjoy,
So I think as important the business building is, I think as important it has become for me to figure out that what is going to be the way to kind of communicate my thoughts and kind of hit the road in that direction. Because gone are the days when, as all of us as kids, knew Cadbury is a brand. Cadbury ke piche kaun hai, who are the creators, no one wanted to know. Everybody wanted to know the brand. At best, the celebrity associated with it, the brand ambassador, right? Now I think the game has totally changed, and basis this journey stepping into lot needs to be figured out. So I think this is something I keep telling myself. Try picking lesser new battles as a founder. Always go in a direction where you're playing to your strengths, because there'll be a lot of things that will be thrown to you which will be must do's, and you will have to scale up in that direction. So if maybe VJ is good at product or procurement or operations, he shouldn't try scaling up in finance in a big way, right? Because there'll be 10 other problems that would be thrown to him. So, right, I think divide and conquer complementary skill set between two founders is very, very,
very important.
Key, right? I leave a lot of the social stuff to him. VJ, can you tweet? Like the way you were mentioning. But I think at some point in time he can lead on it, but I need to kind of be behind him as a distant second maybe.
Yeah. I also tell founders, that you should hire a good marketing head person, whoever, who works directly with you if you really care so much about the brand and everything.
Sure.
Okay.
And then just give them the freedom after setting your vision to just go wild on it, because and then just play support role from there on.
Yeah.
If you can afford that person, if you have that system set in where the organization can also then work with that person, I think that's the best. I personally am a big fan of I just feel all founders personally, me included, we slow down marketing because we try to control it in our vision, and as a function of which we don't get it out. It'll never be perfect because there are other humans in the process creating it for you. So it'll never be what you want. And I feel in that battle, a lot of founders get stuck. So
I can relate to what you're saying. One of our investors who was running one of our brands, it was a protein brand, told us that in India, marketing is looked at as a secondary or a tertiary function of sorts. Whenever things kind of go a little out of whack, which can happen in any business, the first place that one kind of cuts on is marketing, right? That is typically an Indian story. So what should happen is that some sustenance spends in the right direction should keep happening. It's not like a tap that you can switch it on and switch it off at any point in time. For maintaining the equilibrium or balance, you can slow down. But a lot of the founders typically stop. 1 month, 2 months, 3 months, they'll go berserk.
They stop.
Realizing, where is the impact? Because like you said, all of us have grown up in an atmosphere where it's math, science, commerce heavy. We want an ROI for everything.
Yeah.
That's a typical Indian stance at it, right? I think why you mentioned West typically does work because the design and the creative mindset exists there
Naturally,
a little more. We try looking at everything from an impact standpoint, which is great, but kind of the conventionality
slows down.
triggers in a big way. I think that is a struggle that we also are going through.
Everybody, I think, in some stage or the other goes through with it.
Yeah.
I've been there too.
I have a question. When you said you hire a marketing head, like Saanand, since you've been doing this for so many years, at what stage at a seniority level that comes in, at what sort of person we should hire? Let's say we are at early stage seed level. Then you move to Series A, Series B. Your organization keeps floating. Then you have a brand head, marketing head, CMO. What stage do you think these things are required? At what level? Like right now, we've just hired someone who's a senior brand and marketing person, and she's doing everything and works with someone for content, etc. That's about it.
Yeah. I don't think there's a formula or like blueprint for this. Everyone has to find what works for their organization. Like what I would suggest is that try finding people that vibe with you, who understand the core of your business and understand
brand relatability.
What you're trying to do from a vision perspective. Beyond that, for execution, I'm a very big fan of using agencies, not particularly because I run that business as a conflict of interest, but the reason I say that is because I feel agencies are a hub of specialist talent, and they can do anything faster than anybody else in another team can, right? If you brief them, that speed is of importance. Typically, they look for quality because the nature of artists and creatives is to deliver something of great quality, and that's where the speed versus quality debate comes in. But if you can get any execution partner, and it doesn't have to be a creative or marketing agency, you can even have events, you can have for sampling, for influencer, whatever you might be doing. But if you can delegate it to a execution arm, then it's great because you work with them. Some of them can think, some of them can't. You have to choose your partners wisely. But if you can hold together the essence of what the brand is supposed to make somebody feel internally, and that's what if you speak to the likes of a HUL, if you speak to a Tata, Titan brands, or even Reliance for that matter to a large extent, they have a core understanding of what their brand needs to make the customer feel like. Everything else around it is delegated. And I think that's the great model because I feel a lot of early stage startups, especially the tech brands, etc., they overcomplicate it. They want to control the whole hog, and you don't need it, honestly, I feel, because I think there are specialists in the world who do certain things very specifically, and you let them do their thing, but you hold it together. Even as a founder, you would not go out onto the streets and actually distribute the flyer, or you won't sit and oversee what design is being put, what color. You trust a person to take care of it, right? Where you oversee the end outcome and you take responsibility of it. So if that is the structure, then you just need to find like-minded people who can play with you like a team. Then I think everything becomes easier. So there is no formula. I think, and I think the seniority, capability, the vibe, and the financial impact of hiring somebody should all be assessed individually. And then eventually you need to merge them and see how many pluses over the minuses are there, because you'll never get all together ever. So that's how I would say. I've become a big fan of hiring like-minded people in the last 2 years. I think that's the number one success metric, I feel, more than anything else. You need people who disagree with you as well, but the values and how they look at the larger purpose of what they're doing at work has to be aligned. Then I think everything will be easy. Yeah, and I think the other thing is goal setting also. I think that's one thing startups really struggle with. Don't know how to measure marketing result. Then that is
that really, while it's still possible, to what extent is it possible? Because
I think you just decide that, like let's just say reach, for example, basic or impression, basic digital metric, right? Start there and say that's the goal. We will achieve X by Y time frame. And then after that Y time frame, if you're doing well, then try increasing 5%, 10%, whatever. And sequentially try to build it out. And I think in the process, people will learn. I feel the biggest challenge in marketing is people don't stick in one organization and category long enough. So they don't have depth. There's frequent jump. So if you speak to people at a larger legacy organizations like a HUL, they've been in the category of say soaps or washing powder for long periods of time. So they've seen cycles of consumer behavior. In startups, that is not there because by nature of it, it's very, very new, especially funded VC-led startups. So they switch jobs. They go from fintech to something else. Let's say last mile delivery.
Tech to health tech. It can be anything. Startup is totally sector agnostic kind of a market.
So and hence the blitzscale is the model. So then it's throw bodies, throw money at all problems, and they try to solve for it.
I agree with the part on throw money as
well. Money as well.
Exactly. So which is also good for agencies.
Till it lasts.
So that's the sort of a dilemma. But I think it'll stabilize. I think as more entrepreneurs who are building traditional businesses come through, I think traditional principles will also get its due credit, and over time you will see it.
I think the startups which are getting created in the phase from now until 2030 are like in the seed stage of like literally planting the seed, if I can put it that way, would be the ones that would come out at the other side of the tunnel with flying colors, typically because they are getting funded by folks who have built in hardcore businesses. The ethos will come from there, and I think the scale part would come in the next phase if you go to VCs and are looking for growth capital, right? So now it'll be like two worlds getting combined of sorts. So exposure would be higher and the right DNA would be set at the beginning, which is most keyest.
Absolutely. On the topic of going through tweets, Vijay, you did something I think a while back where you put out your vendor list on Twitter, right? It reminded me of when Elon, I think long ago, put out the patents of Tesla out on, I don't know which platform it was, but he released it publicly and said, here you go, because he was getting stuck at regulation, so he wanted everyone to make EVs, right? But why did you do that, and where did that come from?
It happened very at a personal level where I was struggling to find a vendor, and I reached out to this founder, and he did not share it with me. And maybe I was too lazy to find it on IndiaMart, but I was like, okay, fine. And then I started seeing that, it's not like what he was saying, like a Coke formula. You can find vendors online. So I was like, the least you can do and give back to the community is this, right? I'm not talking about, and I'm not sharing my rates or invoices. The least I'm doing is sharing a contact of a vendor. Rest you figure out with the vendor. So I was like, I want to support this community. I wanted to share it back to them. So I basically crowdsourced the certain vendors. Some of them I've still not shared because I feel it is very critical to our business. So I have not shared that. But like basic things, I have shared it and put it out there. If someone can benefit from it, be it. And I keep refreshing it once in a while. And I feel that is my way of giving it back to new founders who are struggling.
What is the feedback to it? Did anyone reach out to you after using any of that contacts?
A lot of positives. Some negatives also, saying why haven't you included this vendor?
Oh, wow.
So I'm like, okay, why? But a lot of positives.
Right.
Lot of positives. Asking, like, saying who does this? Why did you do this? And I'm like, I wanted to do it. I wanted to give it back, and that's my way of doing it. And if it helps, it helps. And that's about it. So it has only vendor name, their number, and their city, and what material they supply.
Right.
That's it.
It's not common, to be honest, in any field.
Yeah.
I feel.
Yeah.
Yeah, that's a very cool thing.
Mm.
Yeah. Rahul, I have another thing to ask you on. I'm so incidentally, Shahbaz from who was formerly at Cult, was on the podcast a year ago. He's not on social media, so I don't think anyone gets to see what he spoke or said. But we had a very interesting chat.
Okay.
And he brought up this concept of an average revenue per square feet as a metric for retail outlets.
Yes.
And we were just talking about a Cult gym versus what probably a Bonhomie would be, etc. And I was alien to this concept was alien to me.
Yeah.
I didn't know that startups
To
looked
me
at it
as
that
well,
way.
since the time,
right?
yeah, when he told me that this is key.
Yeah. So can you just double click on it and tell us what is the thought process for looking at a business from that lens, especially for retail?
Sure. See, the way to kind of think about this is you first need to understand that while everybody wants to do a state-of-the-class outlet, a coffee shop or a gym, but there is a certain, by law of averages, a certain threshold of revenue that particular setup can hit. So even beyond going to GMV per square foot or revenue per square foot, the more important metric or the equally important metric to look at it is RRR, rent to revenue ratio. I think it's the most important metric in retail. Everybody, obviously with good intentions, comes from a zone that I'll make the best gym, best coffee shop, state of the art, but basis the demand that actually exists, and if you want to be a brand of scale, you have to realize by law of averages that what is it that an average outlet can do of sorts, right? And then working backward from that number is very important. Like, I'll digress here a little. Maybe if I have to talk about COGS as a metric in the food industry, COGS is raw material cost plus packaging cost plus wastage because it's a food business, plus logistics associated with moving that. So to explain it in simple terms, like this glass, what is the COGS of this glass? COGS typically is the plastic glass, plastic lid, the coffee, the milk, the decoction, the sugar, and the chocolate that is in this ice mocha. This shouldn't exceed 30% of your total sales. So if I'm spending $100, 30 rupees mein ye ban jana chahiye. Now coming to rent to revenue ratio in a similar way, it varies industry to industry. Like in a gym industry, operating below a 20% on rent to revenue ratio, typically called as RRR, is very tough. But going beyond 25% starts breaking your business. Now if I have to bring this concept to say something like a coffee shop, a big format coffee shop, folks generally do a 1500 to 2000 square feet place, does about 15 lakh, 20 lakh on an average. So in these places, they typically operate at about 1000 rupees per square foot. But the thing to realize is it's not making the cut in terms of these players making profit. So the model could tweak in a direction where, hey guys, I will not do a 1500 to 2000 square feet. I'll do a 1000 square feet one. If I have two big format coffee shops in Kormangla, I will even have a third one. It will be operationally intensive, but then you are giving each outlet a chance to make money, right? it is not always that the size of an outlet is linked to the revenue it can do. It always has some correlation, but people assume that relation to be linear. You kind of have to realize that beyond a particular total square feet, the revenue will start capping out. And that is from where you start designing your P&L, right? So for a format like ours, we typically don't want to operate beyond a 15% rent to revenue ratio. So if my outlet does 4 lakhs, want to operate in the 30,000, 35,000 zone rental, because we are a small format coffee shop, 150 to 250 square feet. Don't want to go beyond that. So our threshold typically is that. Malls typically come in expensive. So in malls, we'll have to take a hit on rent to revenue ratio for sure, right? But what should happen is, basis the 3-4 models you have, you should have a weighted average number for the model. And for us, it's in the zone of 15 to 17% to kind of make it work. And then this concept gets extrapolated to the GMV per square foot, right? So a Bonhomie kind of model typically wants to operate at 2,000 rupees per square foot kind of a model. I think getting your cogs in place and getting the size of your outlet and your rent to revenue ratio is going to be key, because these are two things you can control to some extent, because the cost of labor, the cost of civil for an outlet, the cost of electricity, the cost of water is not much of a role you can play there. So two things in control in the food business is RRR and COGS to some extent. 30% is the ballpark. If you innovate, you can get to 25, but getting to sub 25 is going to be a big task unless you have a scale like Haldiram.
Right. Interesting. Interesting. Got it. Fair. I want to ask you guys one question, not business related, but more for founders. Are disagreements between founders good? I ask also because I am actually a solo founder. I don't have a partner here.
Sure.
So
my take on it is disagreements are important. People typically shy away from conflicts, but what they don't realize is some amount of conflicts are also healthy to kind of basically, sometimes you need a sounding board. Sometimes you need someone to be your devil's advocate. Sometimes you need to be the support to your co-founder, right? So maybe kind of digressing from your question, I think in my personal opinion, one founder for me personally is a no-go, and you can penalize me and you are a proof that it's not true. For me, 2 is ideal, and 3 in some cases maybe, depending on the kind of business you're in, but anything beyond 3 is a crowd and it's like a red flag and like turn around
Messy.
180 degrees and like run in opposite direction totally. So yeah, that's answering a question you didn't ask. But coming to the point, yes, disagreements are important. It helps you be more sharper, be more objective. So yeah, conflicts are healthy to a particular extent. But I think one thing that is very important for 2 founders to work is that even if you're arguing, have disagreements in one room, once you walk out of that room, you should be objective enough to kind of bounce back to your bro code of friendship and not taking a discussion beyond the room. So if one is objective and one looks at conflicts as a way of growing faster or making things sharper, then it typically works. But then both those folks need to possess those qualities. If one of them doesn't possess it, then I think maybe going solo could be a route, but I'm still a bigger fan of having 2 folks and having conflicts and a better way of resolving. It's the same question like asking, it's better to not get married or not have a partner, so you have a lot of freedom, you don't have to ask anything, do whatever you want to, rather than growing together and growing on each other.
Yeah, I agree, by the way. I think solo founder is a recipe for disaster.
Yeah?
Generally, yeah.
Oh,
Even after doing what you have
what you have done,
I
yeah.
think that's an anomaly, right? I mean, also, I don't know how big that is, but I do feel you need a support system. You need a better brain. I think I would have made lesser mistakes, or maybe more. You never know. It depends on the kind of partnership you have. But I feel certain mistakes in retrospect could have been avoided if I had another sounding board, or if I had a different sort of method to sort of validate it, which I didn't. But at the same time, for small stints here, I've had partners and it's never worked. So maybe for me it works in this way better. Maybe. So you spoke of the new branding, right? Drickle. When can customers see it? When is that coming out?
So it's expected to be out in about 2 weeks from now. Sometime in October, it would be live for sure. I think the newer outlets that are coming up would kind of have the new brand colors, the new brand story with the new branding Drickle. I think where it typically stems from is we realized our product here is very, very vibelicious, right? It's a flavored coffee positioning, which is typically going in the direction of the wave in terms of what Indian consumers like at scale. And coffee consumption in India is typically being driven through the youth, the Gen Z. Tea is no more, was never the cool thing. Coffee is the new cool. So the way Vijay and I keep discussing about it is coffee is the new alcohol, matcha is the new coffee. Right? So it's typically going in that direction. You would have also seen raves happening at a lot of coffee shops, right? The culture kind of going in the direction of coffee. If you are to go to an ice cream shop, you find an espresso machine. If you are to go to a bar and a pub these days, if it's a specialty bar pub, there's a very high chance there would be a coffee on the menu, right? So the entire ecosystem is shifting in that direction, and then the branding also needs to evolve as per the TG who you are catering to, right? So Drickle kind of brings about a very youthful vibe to the brand, which typically is drink plus trickle, or one can even look at as drip plus trickle. Trickle typically is like a flow, a mood. So basis the different flavors we have, something for every mood. For a gym mood, there's a cold brew. For get shit done, get work done kind of a mood, there is Americano, or maybe pep me up, there is a hazelnut cold coffee, or maybe to kind of just get through to the Monday blues, there would be a cinnamon cappuccino. So something for everyone, more sugar, less sugar kind of a thing. To do justice to this kind of a product, Bonhomie we felt also started becoming synonymous with cold brews, which is our cold product. So kind of to break through from a purist product to a kind of a generalist product, because the brand name, the branding, the brand colors, everything had to evolve. So I think Drickle is going to be a very, very positive step in kind of democratizing coffee in a very youthful, vibelicious, flavorful form.
Great, guys. Thanks a lot for taking time out on a working day to do this.
Perfect.
Thank you. Thank you so much for inviting us.
No problem.
Great.
I've been inviting you for a while, by the way.
Yes,
Saying.
I know.
Yeah, so
I found the time is right now. So, yeah.
First he deferred it to me, but I said...
I saw that.
Him.
He tried to get out of it.
No.
Yeah, that was the thing.
Yeah. But I'm glad.
Yeah.
Glad we could
Glad
do
it
this.
happened. Yes.
Yeah.